Yo, what's up, guys? Today I'm going to be covering what a turtle soup is and how you can trade it. For me, it's a crucial part of my trading. I don't take a single trade without it. There's no setup that I ever take without a high probability turtle soup. So I'm going to show you what kind of system I use to filter through and find the right ones. And I'm also going to teach you, if you don't know, what a turtle soup is. So without further ado, a turtle soup is a run on an old high or a low, followed by a reversal in the opposite direction. Why is this important? Because smart money, who are the banks and the people who know how to trade, will manipulate price to these levels to trick the majority of traders into losing trade positions so that they can execute their order using the dumb money as liquidity at a better price. So let's say, for example, there are people in here who are shorting down here because they see this big black candle here and they get into a short position. Where are they going to place their stop loss? They're going to place their stop loss at this high because it's the highest high, the highest swing high. And so they're going to be thinking it's going to go wherever down here. So they're going to be in a sell position here, wherever. And their stop loss is going to be here. So this is a order. This is here. And so the people who manipulate the markets, they're doing this, pushing it to this price so that they can execute a whole bunch of sell orders right here at the highest price. So they have a bunch of sell limits here. And when price comes up here, and the dumb money who have their stop loss here or their buy stop here are all going to be into the market or out of the market. And those orders are going to be used as liquidity for the smart money to execute their sell positions above this high. So they want to execute here, above this high. And the point of that is to get a better execution price. And because they know that it's going to go lower, they want to get in as high as possible. And the reason they want to pair their orders here is because they need to execute at the market to execute such big positions. So they want to go hundreds of contracts or hundreds of lots short up here so that they can take it off down here. But because it's such a big order, they need a bunch of other orders to pair it with, because obviously we know a sell order has to pair with a buy order to work. So if we look over here is another example of a low getting raided. So dumb money are long from here with their stop loss here, and they're also short here on a breakout, where the smart money are accumulating a whole bunch of buy orders below that low on a limit, and then they're riding it higher here and selling all through here to get rid of their position. So a turtle soup, when you learn more about it, you will realize that it begins and ends every single move. So here we can see that there's a turtle soup here. This high gets raided, and then price reverses, comes back lower. Here we have a new swing low. Price takes out that swing low and then reverses back into the range that we've created. So here turtle soup starts it, turtle soup ends it. So it's going to be at the end of both price swings. When can you expect a turtle soup to occur, and how can you trade that turtle soup? Now, a turtle soup is a smart money track. Imagine that you're a hunter and you're walking along a path and you see deer tracks. What you're going to want to do is you're going to want to follow those deer tracks to find your prey so that you can hunt it and kill it and take it home. You're doing the exact same thing as a trader. You're watching price action, you're watching the charts, and you're waiting to see this smart money blueprint. You're waiting to see that turtle soup to occur so that you can think to yourself, okay, I can see that smart money are intervening in here. So now I want to be in the market because I can already see that they are. So I want to join in the move. It's like hopping on the back of an elephant. How can I trade a turtle soup? You have to have three things to effectively trade a turtle soup or to trade any move. You need to have your drawn liquidity. So where do you think that price is going to draw to? This can be in the form of old highs, old lows, inefficiencies, timed levels, or standard deviations, anything that you can think of, wherever you want price to go. In your mind, that's what you need, your drawn liquidity. Then you have to have time aligning. So the time at which you execute is extremely important, and there are specific times in the day when a turtle soup is likely to happen. After you have the time down, then you need to wait for confirmation that the turtle soup has happened. So you've seen the turtle soup, you've seen that old low get taken, Now what you want to see as confirmation is price reverse higher after taking that old low, and now you want to see a new entry multiplier created in the form of a fair value gap or an order block or any other sort of PD array that you like to enter on. Then you can take that, and that can be your trade entry. Now a closer look at time. A high probability turtle soup will occur when a key high or low is rated at a key time. A key high or low is the high or low in a certain time period. So, for example, you have a previous day's range. So you have your high and your low of the previous day. Those 2 points are very sensitive to price action. So those two levels, the high and the low of the previous day, are very important. Same goes for the previous week or the previous month's high or low. Now you can also apply this to previous session highs and lows. For example, you can use the Asia high or low, the London high or low, New York high or low, or the PM high or low. Now you want to see a key high or low taken at a key time. Now I've got a couple key times here. There are much more, but these are the most simple ones and the easiest ones to spot. So we have the London Open at 3 a.m. New York Standard Time. Then we have the New York Open at 8:30 New York time, and the Equities Open at 9:30 New York time. Now bear in mind, these are all times for index futures and stocks. So if you're trading the Forex market, it's going to be slightly different. At these times, price is likely to create a turtle soup and then a reversal. So these are the times that you want to be in the market and be watching for this thing to happen. Now let's take a look at a few examples. As a premise, this is our draw on liquidity. We have equal lows here. And in your mind, you think that it's likely that it's going to return back to this level here. And that's your prerequisite for the trade. So you think price is going to come down here. Now you want to look for bearish signs of a turtle soup going in the other direction to your draw on liquidity. So here we can see we have the London high. The London high gets raided at 8:30, key time 8:30. The London high, it gets taken out. Then price starts to reverse. And then what happens? We have a creation of a fair value gap. So when you're here in price, you're already thinking, okay, we're going to go lower. I've seen the key high, the key level I had marked out has been taken, and I can see that the market is reacting from that level. Now I can see we're coming lower. Now I want to look for my entry. Then you can look at different time frames. We're looking at the 3 minute here. And a price returns back into this fair value gap here created. And then price goes lower down to where your draw on liquidity is. So this is a complete model for a turtle soup in itself. You have your London high raid, then your draw on liquidity, your entry, and then down here you could have your stop loss at the top of the high, at the fair value gap high, candle high, wherever you like. Let's take a look at another example here. Here is our draw on liquidity. We have our London high as our draw on liquidity, and we have our London low as our key level that we want to see a reaction from. So price comes down, takes out this London low, then price comes back up, showing signs of a bullish reversal. Then we come back here into an order block paired with a fair value gap. Here that's a fair value gap even though it isn't drawn out. Then price goes higher to the draw on liquidity. And that is turtle soup in a nutshell. Thank you guys for watching. If you enjoyed the video, please leave a comment, leave a like and subscribe to support me. I would really appreciate it. And I'll catch you in the next one.